What does commercial real estate look like on the other side of this monetary reset? It looks very different than what we've grown accustomed to the last few decades. And today I'm going to share my view on where commercial real estate is heading, not next quarter and not next year, but sometime in the mid 2030s when this transitionary cycle concludes. Now, we have to remember there's a structural change taking place here, and that is the fact that real estate is no longer going to be propped up by this store of value premium. For decades, you could buy a mediocre building, underinvest, refinance it every few years, and let monetary expansion bail you out. That era is ending. And going forward, real estate's going to have to compete on three things: utility, yield, and its community contribution. Capital is becoming more intentional and investors more diligent. Real estate is being forced to shed its role as a monetary proxy and return to what it actually is, and that is productive infrastructure that serves people and businesses. Now, as this transition unfolds, the properties that adopt Bitcoin standards, both financially and operationally, will become the most desirable assets in the marketplace. These properties will attract higher quality tenants, they'll maintain stronger occupancies, they'll command higher rents, and they'll generate returns that ultimately beat the Bitcoin hurdle rate. And because of that superior performance, they're going to trade far less frequently. Owners aren't going to be incentivized to sell properties every few years for the appreciation. They're going to be incentivized to hold longer, and that's going to change behavior. Owners are going to invest in the property, they're going to invest in the tenant relationships and in the infrastructure. Cutting corners isn't going to disappear necessarily, but it does become far less attractive. Tenants notice it, consumers feel it, and investors discount it. The properties that feel cheap are going to struggle to compete with those that are designed to last and exude a pride of ownership. Another component here is the inventory. This reset period is going to reshape the inventory base entirely. Many obsolete buildings from the 20th century aren't going to survive in their current form. A meaningful proportion will be either redeveloped or repurposed. New construction is going to look very different as well. We're going to be seeing higher quality materials, inspiring architecture, smart systems, and modular designs that adapt to changing demand. So the days of ripping out tenant improvements every time a lease expires are over. In this new world, utilization becomes the focus. Another component here is capital. Capital flows into commercial real estate are going to be far more selective. I expect a significant portion of new capital to come from Bitcoin wealth seeking a few things. One, diversification. Two, yield. And three, a desire to have an impact on their community. Much of this capital is personal and it's going to be long term. It's also going to be tied to places that the owners and investors have a connection to. Maybe they grew up there, they raised a family there, they built a business there, whatever it may be. Again, you have better aligned incentives that are changing behavior. And in this case, capital becomes far less transactional and more purposeful. The rest of the 2020s will likely be very challenging. I don't see a systemic collapse. I think the incumbents are incentivized to avoid that scenario, but I do see a long grinding reset. And it's not all going to happen in tandem. I think you're going to see when office is struggling, retail will be performing well. When industrial is performing well, apartments will be struggling. So in this world, property specialization, product type specialization remains incredibly important. Fast forward to the 2030s, I see a few things. One, 20 to 30% of today's inventory has been replaced entirely. Utilization is paramount. Assets trade less frequently. Returns are dramatically higher. And there's a jurisdictional arbitrage at play. The jurisdictions that embrace pro-Bitcoin policies are going to attract capital, labor, and investment disproportionately. So real estate's old location remains incredibly important. Real estate is transitioning back to what it was always meant to be, and that is productive infrastructure that supports communities. As always, I want to hear your feedback. Drop your thoughts in the comments below or DM me. I'm also going to ask you to share this. Share this with your clients, share it with your team, share it with your investment partners. I need your help spreading the word. Thanks for stopping by, and I look forward to seeing you here next time.